We've got a big show ahead of us, but one thing to understand, the VIX is currently on the ascent. Now, what does this mean? If we actually invert the scale, it can give you a bit of a directional correlation with crypto and Bitcoin. And so too the stock market as well. We've got a lot to talk about, but first, some housekeeping. Just a bit of housekeeping before we get into the video. The new course, Profiting from CTKS Method Structure, is coming out on the 9th of October, and you can get it for absolutely nothing. To get this incredibly special offer, all you need to do is to be a Masterclass student, be enrolled in CTKS Method Level 1 and Level 2 Standard Certification, or a current member of the CTKS Method service. But the key is to fill in the form that's in the link in the description, and that form must be completed before the 9th of October. If you would like to become part of the Masterclass, there is currently a partial Masterclass scholarship on offer. That's through Shah and Al. The link to apply is also in the description of this video. Our beloved Chairman Powell is going to be stepping in to lower the federal funds rate. There's been a lot of talk about a 50 basis point or a 25 basis point. The street is anticipating a 25 basis point decrease. Why on heck would they be doing that? We know it's going to be 50. Let's run the numbers and see what's cooking. With 7 weeks to the elections, it's going to be a really volatile time inside financial markets. We saw that the Fed cuts during election years. The date of the first cut in October of 1976. There were 4 weeks until the election. And we're seeing in 1980, 27 weeks, 1984, 9 weeks. 2020, there were 35 weeks. And right now, September 24, there are 7 weeks. Now, what's the issue with election years and cuts? Well, basically, governments don't want to be thrown out of office because they put their people through pain. It's a pretty interesting analysis when it comes to net Fed rate changes over the variety of different years in election years. Have a check out of this. Right now, they're basically saying, we kind of don't know how many cuts we're going to have, and they don't know the winner just yet. It's pretty interesting to note the Fed has left rates on hold for actually 14 months. That's quite a long period of time. Just before the GFC, it was 15 months. Just recently, the Federal Reserve did their fastest rate of hiking that we've seen. You can see that it's just been going straight up. It's so different from other periods in time. Of course, one good thing about it, when they lower the federal funds rate, that causes interest rates within the economy to come down. And when we're looking at mortgage rates and savings rates, well, not so good for savings rate, but mortgage rates and loan rates, cars and credit card debt are all going to come down. Hopefully the banks will pass it on. I say that because even though inflation just rampantly went up and supposedly it's come down and it's no big problem at all whatsoever, a lot of prices have actually increased more than 50% from 2020 to 2024. And it doesn't look like they're going down anytime soon. And when we look at average hourly earnings, they've been decreasing in relative percentage terms, but because the inflation rate is now lower than wage growth rate, they're supposedly increasing, but I don't like this trend. It's not a good one. And a lot of people agree with that because home ownership affordability has just plummeted off a cliff, literally. We don't have long to wait for the Fed rate cut decision, and the UK cut decision is coming out tomorrow. And on Friday, the Japanese rate decision will also come out. It is definitely Federal Bank Week. With the FOMC policy meeting just literally 6 hours away and counting down, there's currently a 63% probability of a 50 basis point decrease in the federal funds rate. A lot of people will say, fantastic, the banana zone is here, where we slip on a banana and go nothing but up. But the truth is, institutional players will just recognize that a 50 basis point decrease is pointing to something like the Fed has broken the economic system. You'll hear a lot of commentary about front-loading of rate reductions, but the truth is they're doing something because something is broken. It's important to expect volatility in up-and-coming price action because there is going to be a lot of uncertainty as where things are going to go in the future. And if you missed Ethereum's founder, well, one of the founders, Vitalik, doing his song, wow, you missed out big time. What's important for us to know and to think about is basically prices always moving in a wave. All we need to do is to basically follow where price action can go and just react to it. That's what the professionals do. It's rather difficult to do so when you first start off, but it's the only way to be truly profitable. And when you watch the news, you'll see people saying that the banana zone is imminent and other people saying just be a little bit careful on what can happen because that's what you need to do. It's all about understanding that markets are fluctuating by nature. They're volatile. I have some fantastic news. BlackRock CEO, chairman, and founder Larry Fink is going to be speaking soon on this channel. Let's see what he has to say.
Now, I know you have been a leader in willing to embrace crypto. You have made it so that people can be in Bitcoin. We hear that you are thinking about Ethereum. These are incredible things. Now, BlackRock is not known as a gunslinger by any means. So you obviously must believe that this maybe is an alternative. Is this an alternative in order to be able, because of a deficit, maybe something long-term people should have?
Absolutely. As you know, I was a skeptic.
Yes.
I was a proud skeptic. And I studied it, learned about it, and I came away saying, okay, my opinion 5 years ago was wrong. Here's my opinion today. This is what I believe in today. I believe the opportunity today. I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. Right. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios. I believe you're going to see that as one of the asset classes that we all look at. I look at it as digital gold, as I said before, and I do believe there's a real need for everyone to look at it as one alternative to, I would say, the optimism that I have in the world. If you want to hedge hope, Bitcoin is not an instrument for hope unless you're hopeful you're going to make a lot of money on it. But I look at it as a vehicle in which you're expressing your financial acumen in something that you're more frightened of the world, you're more frightened of your existence. And I believe there's a great industrial use for it. And I think a lot of people are missing that.
I couldn't agree more. I changed my mind about it when you did. You had been my thinking. It was like, you don't believe in it, so I can't believe it. I want to thank Larry Fink for the message of optimism.
Thanks.
And also for a great quarter. Larry Fink is the co-founder, chairman, and CEO of BlackRock, I think the most important investment company in the world.
Thanks, guys. Carl.
Let's put a couple of things into perspective. Bitcoin and crypto is definitely here to stay, but it's subjected to market forces just like everything else. And one of the potential things that you need to keep a bit of a close eye on is the VIX. The VIX is part of the cheat sheet. So if you've been doing your cheat sheet, you already know the market has started to just do risk-off activity. That means that Bitcoin could actually fall. Now, what do I mean by that? When we get big spikes up in the VIX, it's typically recognizing that the markets are going to retrace, and sometimes significantly. The push up in the VIX is not anything to be concerned about. It's something to be taken advantage of and prepare for. Unfortunately, a lot of people just get so many narratives that they don't witness what's actually occurring right in front of their eyes, and they use stories to put on blinders. If you want to be profitable, don't go for stories, go for the facts. The facts in the chart will tell you what is going on. We've recently seen gold doing really well, and I've just popped on the indicator for you. The blue line in the background is Bitcoin. A lot of people think that there's no relationship between gold and Bitcoin. Absolutely there is. There seems to be an inverted relationship just at the current time between Bitcoin and gold. Always be flexible when you understand how to look at charts. When you're cross-reading and looking at interdependence and intercorrelation, relationships will change from time to time, and around federal rate cuts and federal rate increases, that can cause a changing of the guards. What is the logic behind this inverse relationship? For example, when gold is coming down, Bitcoin was coming up. And when gold came up, Bitcoin was coming down. Now you know that Bitcoin controls the fate of the entire crypto market. You could just put Solana here, BNB, XRP, it doesn't matter what you put here. They're all moving in roughly the same direction. This is called directional correlation. So this can be a really good thing to keep your eye on. If we find the VIX is just faking out and just saying, no, I'm going to go down, well, get into Bitcoin. And if we see not so much of a flight to safety into gold, that will be reflected due to structural resistance levels and structural support levels. Make sure that you keep your eye on those. As the world's largest asset manager, BlackRock has a significant impact on the financial markets. But just bear in mind, no alt can escape Bitcoin's gravity, and Bitcoin cannot escape the stock market's gravity. If we're finding that risk is coming out of the market, Bitcoin is a really good canary in the coal mine to let us know what could be happening to the major indices. And the reason you should look at major indices is if you're investing in any form of stocks, they're likely to be tied to one or more of these indexes. If the indexes are coming down, there's a very good probability that your stock is coming down as well. But if they're rallying, there's a very good probability that they're coming up as well. As an investor or a trader, you need to get really comfortable with volatility. Volatility is not something to hide from. It's something to lean into and to understand. When we look at US liquidity, it's starting to pump up. This is typically a good sign, and we would think that US liquidity is pumping up because the 50 basis point increase in the federal funds rate that is most likely coming from Jerome Powell is also requiring that liquidity get pumped back into the system in order to fix the things that are broken. This could materially impact the direction of the S&P 500 and the other major indices, as well as Bitcoin, and potentially reverse the VIX back. But at this time, things are very uncertain. Please keep your eye primarily on the VIX. We've talked quite a bit about the VIX in previous episodes, in previous lessons, but the thing to understand, when the inverted VIX starts to spike down, you want to pay attention to that. And if it starts to spike up, you really want to pay attention to that as well, because they are ideal times to get into the market. As traders, we're always buying and selling. We need a lot of signals to help us to understand if the markets are strengthening or weakening. Right now, we know that the VIX is doing a cutover. This is on a 1 hour time basis. So we already know that the VIX is improving in strength. And we don't want that because we don't want volatility to go up because the inverted VIX will come down. And when it comes down, it could also bring Bitcoin and the entirety of the crypto and stock markets with it. Again, this is not a reason to be concerned. It's just something that you need to be aware of. Realistically, it depends on the size of the rate cut and also if we get a soft landing or a recession. You will find some people are permanently bearish. There's always a recession. It's just coming, but they just can't figure out why it's not here yet. Some people are always bullish, but we're neither. We BORSOG. We buy on the red and sell on the green. We understand that markets are always going up and down in a wave-like pattern. It doesn't matter if the markets are coming down, they're also going up on the way down. You just need to time. Of course, it's easier to time in an uptrend, and uptrends are more forgiving, but you just need to be more skillful if we enter a downtrend. And what are we actually seeing here? In September of '84, they had a 50 basis point increase, cut in the federal funds rate. 3 months after that cut, the markets were positive 6 months after and 12 months after. What about November '87? A 50 basis point decrease. Were they positive? Yes, they were. What about '89? Were they positive? Yes, they were. 3 months, 6 months, and 12 months out. What about 1995 when they did their first cut? Were the markets positive 3, 6, and 12 months away? Yeah, they were. What about 1998? Were they positive? Oh boy, yeah, they were, big time. What about 2001? Not so much. And that is a really big rate cut. That is one of those kind of telegraphic messages which says, boys and girls, we've just blown up the economic system. And what about 3 months out? That was negative. What about 6? That was negative. And 12, that was negative. But look between here and here, going 18% down, and just looking at the volatility that exists between these negative numbers, you could always make money in any market, even the September, the global financial crisis. You can make money, but you just simply need to know what you're doing. And you don't have to go short because a lot of people don't like going short. They want to go tall. What about in July of 19? Well, that went positive as well. So apart from the markets absolutely imploding on themselves, the vast majority were actually positive 3 months, 6 months, and 12 months out. Just a statistic, but just keep this in mind. Larry Fink and all the big institutions want Bitcoin to be digital gold, and that narrative will get out there sooner or later. But at the moment, Bitcoin is a very risk-sensitive asset class. That means it's inversely following the VIX, something to be aware of again. Depending on the size of the rate cut, if it's 25 basis points, we expect a lot of positivity inside the markets, and that of course includes crypto. But if it's 50 basis points, we would expect negativity. So we're seeing a tremendous amount of uncertainty inside the market, but smart money is anticipating a 50 basis point decrease in the federal funds rate. Therefore, it's really important to keep your eyes on the statistics. The stats will tell you what the newspapers don't want you to know. I believe it's absolutely critical to be able to trade plus invest. A lot of people don't understand financial markets, so therefore they just put their money in and pray and pray and pray that things are going to go up. And then, of course, you do get those kind of positive actions because people are generally drawn in when prices are going up. But if they reverse on people, they often either hold or sell at a loss, and often quite a deep loss. This is why trading is so incredibly important. Traders are all about timing, getting in and out of positions, and looking across the Tier 1, Tier 2, and Tier 3 charts to make sure they understand the pulse of the market. Peter from Game of Trades is a really fantastic analyst and a really good guy, but by God, he is negative. It's kind of like George Gammon. George is a wonderful human being, but George is so negative as well. And don't get me started on the epic economist. He is also very negative. Now, anything that comes across a negative desk is going to have a negative connotation, and it doesn't mean they're wrong, but it does mean that they are just looking at one side of the trade. That is, the price is either going up or it's going down. We don't want to think in this way because it's not real. Price is always going up and down in an uptrend. And it's always going down and up in a downtrend. If you know how to take advantage of these things, you have no problems. Just to give you a really recent indication, if you bought down here, and that's not even the bottom, but if you bought around there, coming up to here is like nearly 25% increase. If you know how to buy and sell, you can do incredibly well. You don't have to worry about the tops and you don't have to worry about the bottoms. You just need to watch the intercorrelation and interconnection between the Tier 1, Tier 2, and Tier 3 charts. And here we're just looking at the inverted VIX. What is this telling us? It's telling us that the VIX may be just faking things out, at least for the time being. And inside the new course, there will come a whole range of different indicators in order to give you a trading edge, and of course an investing edge, but primarily for trading, because if you know how to trade, you're going to be an incredible investor. The thing to keep in mind is that there is structure that underpins every single price chart. If you know where the structural resistance levels are and the structural support levels are, if we get failures, structural failures, that means that we're going to get magnetically attracted to the next structural level below. If we get a structural pass, it means the next structural level above. That's how simple it actually gets. It's not complex, but it takes a while to disengage your emotional brain because the emotional brain doesn't like loss. We all hate loss, no question about it. And we don't do well with uncertainty, and financial markets are very uncertain. One of the things that we saw just recently was this dip down into this negative fair value gap, or what we call negative air, through the CTKS method. We know that this particular area is dangerous because just as we rallied up, as I mentioned the other day, we can certainly rally back down again if we get negative momentum. Now, what could cause this? Well, it's just primarily at this time a spike in the VIX. Therefore, if we do not hold on to this 59,999 level, which is currently structural resistance, if we don't do that, we could fall all the way down to 58,909. Remember that we were there and we just pole vaulted up. I hope you took advantage of that. And we take advantage of this negative volatility inside the market to load our positions, but we must do so from a structural perspective. One thing that literally gives new investors and traders a bit of a heart attack is not knowing where the structural levels are. You can see we have so many of them down here. We just have a barrage of them. But what is likely to happen if we fall down hard and fast? It's going to just scare the living daylights out of people. Just remember, positive fair value gaps or positive air can literally turn into negative air. This is why we must know where the structural levels are placed, how strong they are, and thicker and more clustered means stronger, and how spaced out they are. Because if they're very spaced out, they can just accommodate price going through them. But that actually means the other way as well. Thank you to everybody who's watching and especially commenting. TSP did a beautiful quote in yesterday's video, and I just wanted to share this with you. Cannot wait for the new course to add all my knowledge in from. The masterclass was life-changing. Level 1 and Level 2 gave super confidence, and the service is a license to print money. As a community, we're all about helping you to be a better version of yourself and to be more of a financial and emotional blessing to yourself and those you love. You're going to find the new course absolutely awesome. Thank you so much for being a member of our global family. And if you're new, please feel welcome to just reach out and say hi. We're just one of the best communities on YouTube. I'd like to also thank all the people that reached out and let me know what they're wanting from the new course. It's so helpful. I just want to thank everybody so much. And many people talked about the CTKS Creed. These are daily positive affirmations for abundance, financial success, and happiness. If you know that the universe wants you to succeed, you can approach each day with kindness, integrity, and gratitude. You're not in competition with other people. You're just seeking to be the best version of yourself. It's an absolutely beautiful thing to know that opportunities and life reset daily. Whatever happened yesterday, that's done and dusted. Today is a completely different day. And you are worthy. You're worthy of all the best things in life. There's no need to hurry. Just go slow to go fast. That will get you there faster. Starting small and scaling is an absolute key with everything. But inside financial markets, we buy on red and sell on green. That is a license to print money when you know how to do it. Always understand that anytime you get a life pullback, you're getting the strength for the next life rally. That means your setbacks are actually set-ups for a much better life. Therefore, it's really important to stay dedicated and committed. Just always tell yourself, I win or learn and never blame. Never blaming is a very important thing to do, and it's very difficult to do as well. When you're trading and investing, there's so many regrets that you will just naturally have. Why didn't you sell the top of that move? Why didn't you get in before it took off? It's just all part and parcel, and you can't get rid of those things. They will always happen, so don't worry about that. Just understand that you can do just incrementally better the next time, and always solve your problems with positive excellence. If you understand that all results come from the mind, and a better mind creates better outcomes, and you create literally better habits, creating your better life, you will find that life is for you, and the CTKS Creed is very powerful to just hammer these concepts in. Just looking at it each day is a really, really good idea. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. And the secret word today is opportunities. Opportunities are everywhere. If you can drop a comment with the word opportunity somewhere in it, I know that you made it all the way to this point, and you are awesome. Bye for now.